Welcome back to the channel, everyone, and thank you for tuning in to another great video. Let's talk about winning trades, okay? How can we grow them? How can we maximize the most out of each trade and take home the most in profits, okay? So, most times, even I'm a scalper. Most times we are always looking to do what? Scalp for a few points, possibly maybe even a few ticks, depending on your trading style. I trade supply and demand, okay? Now, here's the key to really being able to stay in a trade longer, all right? Use your higher time frame. As simple as put as that. Look for opportunities where the market is pulling back, retracing, yes, that's what that means, to an area where off your higher time frame, okay? So if you're using a 60-minute chart, for me, I use range-based charts. So I'm looking at a 60R, or maybe you're looking at it even in a higher time frame chart. Let's say a 4-hour chart, okay? Maybe a daily chart. Whatever it may be, wait for price to retrace back to a key area of supply or demand off the higher time frame. Now, I'm not saying take your trade the moment that price retraces back to a demand zone or a supply zone off the higher time frame, but allow that to be your gauge. Allow that to be your roadmap, your GPS, to where price pulls back to either one of those zones. And once price gets there, then we are scaling down to what? A lower time frame chart, okay? So if you're using a 60-minute, maybe you're using a 5-minute. For me, I'm using a 12 range chart. If you're using a 4-hour chart, maybe you're using an hour chart. I'm not sure. It doesn't really matter, but I'm saying use paired charts and using a lower time frame to look for the rejection and to get in the trade, all right? Do not, and I stress, do not, well, based upon how I trade in my trading plan, I do not take my trades from a higher time frame chart. Why? Because if we get in a trade off a higher time frame, we may not be able to get into the trade at a precise entry, and the market may pull back against us, and then we jump out of a trade and we lose money. And even though we were into the trade in the right position or the right direction, I should say, you get shaken out. So if you're taking trades off of higher time frame charts, unless you have the capital to be able to weather the storm, I would highly recommend not doing so, because you may get shaken out of the market once it pulls back against you several points before it moves in your direction. All right. So with that said, let's take a look here at a few entries and what I'm talking about. I'm just going to show you 2 examples. All right. Now, for the elite members, I broke things down and went into detail. I posted a video yesterday evening for the elite members. If you're interested in becoming an elite member, simply go to the YouTube channel or here on the YouTube channel and click on, I believe it's the join button, and then you will see the elite membership tier. All right. That's where individuals who are interested in receiving, you get the trade breakdowns, where I break down things more in detail. I posted yesterday a trade breakdown video for the elite members, to where I walked through and broke down a trade that I took on June the 9th, which was I think it was a 13-point winner, 10 points on the first contract, 13 points on the second contract. But it was using the same thing, which I'm going to roughly kind of go over today, to kind of put out there, because people ask this question: how can they stay in a trade longer? What is it possible they could do? So there are, for me, there's one key thing you can really do, and that again is taking or marking off higher time frame zones. Okay, not taking the trade when price gets to it, but marking it off and allowing price to come back, to the zone. So say, for instance, if the market is making higher highs and higher lows, what type of trades are we looking to take? I would be looking to take demand setups. Okay, so if the higher time frame is showing me, say for instance here, we're making higher highs and higher lows, I want to mark off or find a demand zone off my 60 range chart and wait for price to patiently come back to it. Then scale down to my lower time frame, and that's going to kind of more so give me pinpoint the area and show me a little bit more detail as far as allowing me to execute and get into a trade based on looking for rejection, okay? So I want to run through to show two examples here. Both of these are demand zones, and from the flip side, it can work the same way if you're looking for supply zones off the higher time frame and then scaling down to a lower time frame to look for your entry. So let's take a look here at this entry right here. This zone right here. This is a demand zone. Demand. We have aggressive buying coming out of an area. Now, this here is a breaking structure to the upside. Price pulls back. This here is a breaking structure to the upside, and we have aggressive buying. Now, this is also a demand zone because we have aggressive buying. We wait for price to pull back to the zone. Price pulled back to the zone, I believe it was June the 6th when this took place, when price retraced back to it, okay? The zone was actually created, the breaking structure was created where we had on June the 2nd. But price pulls back to it off the higher time frame on June the 6th. So now that I've got this area, this is this green rectangle right here, okay? Or outline rectangle. I'm going to move down to my 12 range chart. Again, if you use a 60-minute chart, maybe you're using a 5-minute chart as your entry chart, okay? So this is the marked off area right here. I'm going to bring this over a little bit, make it a little larger, all right? Now, when price pulls back to the zone, okay? All right, there's a couple things I'm looking for me to be able to, before I just jump into a trade, okay? First of all, we retrace back to a higher time frame demand zone. All right, and we are bullish, okay? We had the market making higher highs and higher lows. Now, typically when I'm looking to take a trade off of a higher time frame, not off the higher time frame, excuse me, but at a higher time frame zone and then scaling down to a lower time frame, there's something in particular that I actually look for. And if you're interested in finding out more about that in detail, again, the elite members, those that actually sign up to support the channel here, to support me as a content creator, they get the full breakdown of the details, and that's the purpose. It's $6.99 a month, guys. So it's basically the price of a cup of coffee that you may spend on a daily basis. $6.99 a month. Okay, you spend a whole lot more than that in coffee on a daily. Most people who drink coffee or have some favorite beverage that they drink, but I give those tidbits, those prized possessions or full breakdowns of the actual trades. I'm giving things to individuals or to groups that actually really are loyal and support the channel here. Okay, I already give away enough information for free. I mean, because I want to see people succeed. But my time is very valuable. Okay, so for $6.99 a month, it's just a way for you to support me as a content creator, for me to continue wanting to grow this channel, for me to continue wanting to provide information to individuals. So $6.99 a month, even though it's a very, very, very nominal fee or very minimal amount of money, whatever the case is, it still aids in the process of supporting the channel in a whole as me as a content creator. And I appreciate everyone who's doing so. Okay, we have a group of elite members that have signed up, and they love the trade breakdowns as well as other perks that you do receive. But anyways, I don't want to talk about that anymore. If you're interested in joining and becoming an elite member, you know what to do. Click on the join button on the anywhere on the YouTube channel. You'll see a join button on any video or a join button on the homepage. But anyways, that's where I go into detail and talk about entries like this right here and give away my little hidden secrets or the tidbits to why I really took a trade when price pulled back to this key area, this key zone here. But all right, so what happens when price taps into the zone is that I'm looking for a clear means of rejection, okay? And when we get the rejection, I'm going long, right? So we pull back to a key area of demand, all right? And I'm looking for the rejection to take place. Once I get rejection, then I am going long, okay? So, and once I'm long, I'm looking to do what? I'm looking for price to, move higher and take out areas of liquidity. That's the key, all right, in a sense. Once we're into the position, people always ask, what am I gauging? What are the areas that I am looking to target, okay? Target. My first means would be this area right here. So price taps into the zone. I want to see price for one tap into the zone. Now this opportunity right here where we see this little, it's not really a full candle, it's just a wick there, and then price moves away, it pulls back to the zone right there. Okay. These are opportunities where you could have looked for rejections to go long, but I'm really interested in once price fully taps into the zone right here. Okay. And once it does so and I see rejection, then I'm going long and I'm looking to take price where? Back up and start. My first target is going to be this area of liquidity where we have equal highs resting right here. All right. But as well, I'm also looking at areas where we have gap fills or imbalances, I should say, all right, resting in the market. So as the market was moving lower here, okay, retracing to tap into the higher time frame 60 range demand zone. All right, I noticed that we had imbalances as we were stair stepping to the downside. Once it taps in and rejects, again, the first target is going to be liquidity, areas of liquidity, and I'm also possibly going to once price is taking out liquidity there, I'm going to also be interested in allowing my trade to possibly trail behind and start filling in some of these imbalances right here. So they drive the market lower, tapping into this demand zone with the goal to just push the market higher. We were already bullish. Okay, price just came back to a higher time frame demand zone, which I showed you here, to basically pick up remaining orders that were here resting right here. Oh, excuse me, not right there. I'm sorry, guys. Right here. Okay, right here in this area right here, just to push the market higher. That's what they were trying to do. There was imbalance at this demand zone after this break of structure to the upside. Back at this demand zone, price comes back to it, taps into it, they fill the remaining part of the orders, and the market takes off back to the upside. Okay, as you can see right here off the higher time frame. So that's pretty much in a nutshell what happens in a case like that once price taps into a higher time frame demand zone, especially if the market is trending in a certain direction. In this case here to the upside. So a demand zone where there's a resting imbalance at, say for instance, then if price comes back to it, we can expect for the market to want to continue probably pushing to the upside. So again, my goal is going to, once I'm into a trade, is to aim for the first area of liquidity, and I see we have these resting imbalances right here as well, so I'm going to aim for that and take off most of my contract size, whatever the case is. If you're trading with maybe 2 contracts, 3, 4, 5 contracts or more, whatever the case is, take off majority of your contracts at the first area of liquidity. And if you have gaps above or imbalances there, then you can aim for that by trailing behind. Now let's move on to the second example that I want to show right quick, which was this next area right here. So again, like I said, price pulls back, starts to push higher. It breaks structure here on the move to the upside. We have a demand zone right here. Okay, we have an imbalance resting at this demand zone once price pushes higher and pulls back to the zone. I'm going to scale down to my lower time frame. Now this zone here was created on, I believe it was June the 9th, I want to say. June the 9th, we had the break of structure here. And price didn't actually break structure here. Again, June the 9th, okay? So we have this demand zone resting right here. Price pulls back to it June the 9th as well, sometime in the afternoon. So we'll scale down to the lower time frame. Look at that now. And that area is right here, okay? All right. So this took place, June the 9th, okay, as you can see here below. So, again, break of structure to the upside. Demand zone from the higher time frame. We're still bullish, so I'm looking for an opportunity to take a trade long. Price pulls back, okay? And once price pulls back to the zone, I'm looking for rejection to do what? To go long. Now, once price pulls back, we see rejection. I'm looking to take my first contracts or my first majority of my lot size off at the first area of liquidity above. We have liquidity resting right here at this high here. Once price taps into the zone, all right, so at 43.51 and a half, I'm going to take majority of my contracts off there. Now, if you look to the left as well, what do you see here? We see a bunch of imbalances. These are areas where there was aggressive selling to the downside and the market didn't pull back to basically fill, say for instance, remaining orders, okay? So there could have been remaining orders where price started slamming to the downside one red candle after another and not pulling back, filling orders, and then pushing, below. So it left voids or gaps in the market where there could have been orders resting at, and the market doesn't pull back to transact at those areas, but it can just flushes and continues pushing lower. So I'm looking through for price to fill those imbalanced areas right there, okay, as it rejects this area to come back and fill the rest of those imbalanced areas right there. All right, so look what happens. We get rejection right here, boom, liquidity right here, first area to take out for profit, the TP at, and then so we're in the trade, it hits the TP there, okay, and then the market does what? It continues to run to the to the upside, taking out these imbalances, and then it also takes out liquidity at the top end, meaning what does it do? It's taking out the highs up here at 69.5. All right, so I just wanted to show you and let you know, if you wait patiently for price to really tap into demand zones or even supply zone off the higher time frame, then scale down to a lower time frame chart and wait for some rejection to actually happen. But before you get into the trade, also look to see where are you possibly going to get out at, opportunities or zones. Not saying zones, but areas to get out at. For me, liquidity here, imbalance look in the field. I'm going to get out, take my first or majority off here, and then we have these imbalances right here to where I can allow the market to trail and pick up hopefully some additional profits as price continues pushing it upside, filling these imbalances. All right, and we can also target and aim for other areas of liquidity above as well. So just if you really want to grow your winning trades and want to stay in them for a longer period of time and look to pick up more profit, but you just have to be mindful of what's going on in the market. Once price, say for instance, takes out an area of liquidity, okay, and then it starts to, let's say it starts to turn to the downside, okay. People always ask me this, well, how do you know when to get out? Well, typically once price hits my first TP, say for instance, and then I see it turn. In this case here, I start to see one red candle close right after another one. So I got a red candle to the downside, another one closes, another one closes. After a price, the first, say for instance, candle to, say down candle to the downside here. Well, in this case here, this will be the high right here of this leg to the upside right here. So let's say this candle here forms to the downside, close to the downside. That's a bearish candle, right? The next candle close to the downside, okay, I'm going to be out probably at that area there, okay? But, I've already taken off multiple lot size here, okay? Maybe I got one contract running. This depends on how many contracts you have that you're in the market with. For me, I'm still trading 2, 3, 4 contracts or whatever the case is. I could trade a whole lot more, but I'm just comfortable in doing so. It's not all about me going in with 10, 20 lots, whatever the case is. I could definitely do a whole lot more than that, but I'm comfortable where I'm at. Just scalping, because that's what I am. Even though I can pick up 10, 12, plus points on in either direction, depending on the trade setup itself. I'm just comfortable trading small lot sizes and looking for maybe 2, possible 3 setups a day. So it just depends. One and done type trades, that's excellent. Kudos to everybody who does that, especially trading nice size lots. There's nothing wrong with that, okay? Really nothing wrong with that, especially if you don't have much time to really spend trading and you look for one solid setup a day to get in. You put your lot sizes on, say maybe, I don't know, 6, 8, 10 contracts, and then you look to take that one trade and you're done, right? So basically the same thing, guys. I'm looking for 2 or 3 setups and doing it that way, okay? So, but it just depends on your trading style, all right? But either way, like I said, my first lot will be here off, or whatever case is, first size of contracts will be off here, and then I'm looking to collect on the remaining right here. So I like doing that, and I've actually shown growth in doing that, because I talked about this at the beginning of the year about allowing my runners to run and stay into a trade longer. So that's what I've been working on for my own trading this year, is just being able to stay in trades longer, turning those 2 and 3 point scalps into 5, 6, or 10 point scalps. Okay, So either way, I just want to show you guys that and how you can do it. You just have to be a little bit more patient and wait for the bigger zones to unfold. All right, guys, I appreciate everyone tuning in. Please take the time, if you're not a current subscriber, to go ahead and click on that sub button down below. I think it's somewhere to the right, bottom right corner. Click on the subscribe button if you're not a current subscriber. And please make sure to click on the bell next to it. Turn all your post notifications on so you never miss one of the uploads here to the channel. Last but not least, please take the time to go ahead and smack that thumbs up button if you found the content or the material discussed in today's video to be valuable information. I definitely appreciate it. It helps the channel out. It helps the algorithm out. And again, if you want to become an elite member, all you have to do is click on the join button on any video, or you can find it on the home page as well. And you'll see 2 tiers there. You can sign up for the elite membership, and that's where you get the trade breakdowns. That's all I have for you guys in today's video. I appreciate it. If you're also, one other thing, guys, if you're also interested in joining the Discord, we have a great team or community. You can find the link to the Discord down in the description portion of this video. And that's all I have for you guys today. I'll see you in the next video. I'm going to wrap it up, signing off. Have a good day.